Hello, everyone, and welcome back to another episode of the Amelia Island, Nassau County Real Estate Market Buzz. I'm your host, Joanne Patience with Iron Valley Real Estate North Florida, your trusted guide to understanding the real estate market here in beautiful Nassau County, Florida. Today's episode is our deepest and most comprehensive breakdown yet. We are diving into the October 2025 single-family housing market report, and we are going to peel back not just the numbers, but the stories, behaviors, patterns, and predictions behind those numbers. If you are a homeowner, a buyer, an investor, relocating to the area, or simply curious about what's happening across the beach, Amelia Island, Yulee, Callahan, and Hilliard, this episode is designed to give you clarity, strategy, and confidence. We will talk about what changed from September to October, why the year-over-year numbers matter more, what the pricing tiers are telling us, why cash buyers are dominating, why we're approaching a balanced market for the first time since 2020, what the economic forecasters saying about 2026, and most importantly, what this means for you. So settle in, get comfortable, and let's begin. Let's start with the big picture. October 2025 brought exactly what seasoned real estate professionals expect this time of year. A seasonal adjustment, not a slowdown, not a crash, not a concerning dip. Here are the headline numbers. Closed sales, 120 up 34.8% year over year. Median sales price, $515,000, down 5.5% year over year. Average sale price, $690,925, up 5.8% year over year. Cash sales, 41.7%, up 85.2% year over year. Inventory, 583 homes, up 20% year over year. Month supply, 4.9 months, which is up 22.5%. Those numbers alone tell a story. We have more sales, more inventory, more money flowing through the market, and stronger buyer activity than we did 1 year ago. That is what a return of a healthy, predictable market looks like. In September, we had 140 closed sales, one of the strongest months of 2025. October dropped to 120, but the decline is completely expected because fall always softens after the late summer rush. Buyers become more selective, inventory levels shift, mortgage approvals slow down during the holiday season. People don't like moving during the holiday, Thanksgiving, Christmas preparation. The more important number is the year-over-year comparison. In year-over-year, the market is significantly stronger than October 12, 2024. That's why professionals and economists always look at the year-over-year, not month-over-month. Now, let's talk price behavior, because this month's numbers gave us a fascinating look at buyer segmentation. October saw a median price down to $515,000, an average price up to $690,925. This creates what we call a pricing divergence, and it tells us the market is running in two lanes at the same time. The median fell because more mid-price homes sold. Buyers in the $400,000 to $600,000 range were more active. Sellers adjusted pricing more realistically. Affordability improved slightly with lower rates. This is a normal, seasonal, and predictable. The average price climbed because high-end buyers didn't slow down. In fact, high-end activity surged. $600,000 to $999,000 sales grew 56.5% year over year. 1 million plus sales grew 7.1% year over year. That's a very strong luxury line. What this tells us that wealthy relocators, many come from high coast states, continue to view Nassau County as a value play, a lifestyle upgrade, a safe long-term investment, a low tax benefit, a coastal alternative without Miami, Tampa pricing. This upper tier strength is a foundational pillar in our current market. One of the most important points this month is the dominance of cash buyers. Cash made up 41.7% of all sales. That's nearly half the market. Why is this happening? People relocating from high coast states bring equity. Retirees are liquidating and moving cash into real estate. Investors feel confident in Florida's long-term appreciation. Buyers expect mortgage rates to fall in 2026 and don't want to refinance twice. Cash avoids delays in Florida's evolving insurance market. Meanwhile, mortgage buyers are taking their time. That's why median time to contract increased to 74 days. And here's a deeper insight. The gap between time to contract, 74 days, and time to sale, 118 days. This 44-day difference tells us finance buyers experience longer underwriting periods. Inspections and appraisals are taking more time. Title companies are navigating more out-of-state closings. Buyers are being more thorough and calculated. And yet, sellers still achieve 95.2% of the original list. That's a healthy outcome. This is not a distressed market. It's a thoughtful, selective, and stable one. Inventory climbed to 583 homes, which is a meaningful increase. Month supplies rose to 4.9 months. Now remember, 5.5 months equal a balanced market. Less than 5 months equal seller leaning. 6 months or longer equal buyer leaning. So at 4.9 months, we are closer to balance than we have been since 2020. That balance creates more options for buyers, more negotiation space, more realistic pricing, less overbidding, better appraisal outcome, more time for due diligence. For sellers, this means pricing must match the current market, not 2022. Preparation and presentation matter more. The list high, waiting for offers strategy no longer works. Buyers expect value and transparency. This shift toward balance isn't bad. Balance is healthy. Balance supports a long-term appreciation. This market does not exist in isolation. It is shaped by the broader economic development. Interest rates, the big driver. On October 23rd, mortgage rates dropped to 6.17%, the lowest in months. Economics and Freddie Mac expect low 6% rates through early 2026, possibly high 5% rates later in 2026. Whenever rates drop, even slightly, demand rises. Inflation is stabilizing. This increases purchasing power and reduces financial anxiety. Job market remains strong. Strong employment equals strong housing demand. GDP holding steady. A balanced national economy supports consumer confidence. Construction costs stabilizing. This sustains new development and impacts pricing on both ends. Insurance markets calming. Florida is still adjusting, but we're seeing early signs of stabilization. Put together, these factors create a predictable environment, something buyers and sellers both need. So what does all this mean for 2026? Economists expect 2 to 4% home price growth nationally. Slightly higher growth for coastal counties like Nassau. More balanced inventory, continued relocation demand, more competition when rates dip. Let's break this down for each group. Sellers, you're still in a strong position, but strategy matters more than ever. Price according to real comps. Prepare the home to remove objections. Use professional photos, video, and staging. Understand that buyers are selective, not scarce. Expect slightly longer market times. Negotiate with confidence, not fear. A well-prepared home still sells extremely well. Buyers, this is one of the best buyer environments since 2019. Why? More inventory, less competition, fewer bidding wars, more negotiating room, rates stabilizing, sellers open to concessions. Waiting may result in higher prices, more buyer competition, less negotiation power. If you see the right home, act now is smart. Nassau County is still a top destination for retirees, remote workers, military families, families seeking top schools, people seeking affordability and coastal living. We offer beaches, golf, outdoor activities, lower taxes, proximity to Jacksonville, master planned communities, strong resale and new construction options. You're not just buying a home, you're buying a lifestyle. Investors, with cash dominating, investors play a major role. Nassau County offers strong rental demand, stable rents, reliable appreciation, low vacancy, growing population, expanding job base. This is a fundamentally solid investment market. Builders remain highly active in Nassau County. They are offering buy-down incentives, closing cost help, upgraded spec homes, fast move-in timelines, energy-efficient features, outdoor living upgrades, multi-generational floor plans. New construction competes directly with resale now. Buyers should compare both options because incentives can make new builds extremely attractive. But you have to also look at the total picture and the cost breakdown compared to buying new construction versus a resale. The October 2025 data paints a clear picture. This market is steady, healthy, balanced, and full of opportunity. Whether you're buying, selling, relocating, or investing, this is the time to put a strategy in place. If you like the full October market report, a breakdown of your neighborhood, a custom home valuation, a buyer consultation, or help preparing for a move in 2026, I'm here and ready to guide you. Thank you for listening to this deep dive episode of the Amelia Island, Nassau County Real Estate Market Buzz. I'm Joanne Patience, and I look forward to helping you navigate your next real estate decision with confidence. Until next time.